Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
I've got a quick question here about which ETFs do you trade from Mike. I appreciate that. Mike, we'll talk about the 32 ETFs a little bit more in depth here in a little bit, but just off the top of my head, there's a lot of the ones out there that wouldn't surprise anybody that I trade, like the IWM, which is the Russell 2000, the GLD, the Gold ETF. I do like SLV. I think there's 6 or 7 different silver ETFs. But as long as it's, that's not really a diversified, per se, ETF, so I'm not really worried about the holdings. But I am concerned about the liquidity on something like that. But SLV would be the best. I like a lot, like the Market Vectors has some good ones like KOL, Coal, ETF, MOO, MOO, Agribusiness. Today we just got into a directional trade on XLE. And to be quite honest, I prefer OIH over XLE, but we couldn't reach, and this kind of lets you again in on what we use. We have some certain points. For example, it was a debit spread, and we needed to get at least a minimum amount of discount for getting into that debit spread. Otherwise, it's not worth doing, and we just do a straight call or put. In this case, we weren't really able to get it and stay within our price range for the overall cost for that position. So with OIH, so the chart and the signals were identical on XLE, and sometimes it's not identical, but today it was. So we were able to basically just kind of shift over from an OIH, which is oil service holders, to XLE, the Spiders Energy ETF, to buy that. It was a bullish debit spread. And it's our outlook is anywhere from 7 to 21 days on a long trade. The benefit of it is that we were able to go. The benefit was that we were able to patiently wait for this pullback, and it gives us a lower risk entry. So today's low on XLE actually must hold. Otherwise, we've got to get out. So we've reduced our exposure on the technical side, looking at just the chart, to that low-risk entry. And then on the option side, you've also got to perfect that type of play, which we weren't able to get in on OIH with the discount of our cost, but we were on XLE. So overall, we felt pretty good about the trade. And guess what? It may not work out, but that's okay. We know what our key levels are, and we know when to get out. And that's worth $1 million to not have to sit here and second guess yourself and try to do a ton of research on the fly to see if you were right or wrong. And that's obviously just typically not going to lead to anything profitable. It's just going to lead to a bunch of running back and forth, which you obviously don't want to do. Let's see here. How many positions will you focus on at once? This is another good one. I mean, you do want to keep your focus, and I typically like to keep it to about 6 positions most. I don't really have that big of a problem with the 6 positions, but at times, given the overall portfolio, the one thing I don't have listed in here is 6 positions on at once, especially with just options. You're going to get a lot of variability when you've got, let's say, if you've got 6, 10% positions, what are you overall percent-wise invested? 60%. So 60% does what? Yeah, think about that 20% risk. If you're down 10%, then you're down 2% overall. So you could really get hit hard if you're exposed 60%. So the real goal of any options portfolio is to do what? It's just to give you that nimble activity of I try to keep up with the market or outperform the market when it's going up, but when it's going down, I've got to strike and strike quick as possible. And that's going to give me overall better performance of the market. At any rate, those thresholds that I would recommend would be no more than 6 positions at a time. Anyone out there who's held a lot more positions than that knows that, number one, what happens? You get one stock or one position that's an options position that goes against you, and if you've got 4 that are doing moderately well, that one huge loss can wipe out all 4 of the other ones. But you can sit there and really mentally just justify it, avoid it, and before you know it, you've got 100% loss, and you have to avoid those huge losses. It's just amazing, truly, how much it takes to recuperate from those financially, but also from a mental standpoint. So I find that you're much more likely to really to just justify those, holding on to those and getting into the hopium mode when you've got a bunch of positions on. Stay focused and follow your system, period. All right. So trading journal, this is another one. Most of you are here, so you do want to learn how to create a trading plan. The trading plan is more or less that document, that leading document that tells you what to do every day. Tells you what to do before you get into a trade and when to get out. But part of that trading plan can be augmented with a trading journal, i.e. just a place to take notes. Most trading platforms you can take notes on charts. I would recommend even, I use something called SpringPad, which is a lot like an Evernote application. These are basically just note-taking applications. And I've seen people even just create one-sheet papers to really go through a checklist of things that must be happening for you to get into a trade. And then at that point, when that doesn't happen, what basically you need to, you want to continue writing down and following your rules is really just a guideline to help most people. It's help you do a guideline. I don't use one because we've given it out to some of our coaching students because a lot of times we feel like they just need that extra help to essentially do exactly what we've helped them create, i.e. the system, and it really helps us be able to gauge if they're doing it or not. But in the end, it's good for you to capture your emotions to where you can go back and look at it and say, okay, yeah, man, I was about ready to get out of that trade because this intraday volatility, but, my system said I wasn't supposed to, and I didn't. Good thing I followed my system. You may also find out that it's just not worthwhile for you to be watching CNBC. I mean, I've more often than not, and I really shouldn't call them out more than anybody else, but just as well as any 24-hour cable news source, it may not be profitable for you to be watching that, especially during market hours when you're making decisions that could be putting capital up for risk. Great shows on there, not saying that they're bad shows, but if it's too difficult for you to make a objective decision when watching something, then it's just doesn't need to be within your trading, wherever your trade station is, at work or at home or wherever that may be. So the trading plan or trading journal will really help you kind of maximize the way you feel about what you're doing and how to really make it better. Your position review process, and these are all things, again, we'll be able to get these slides to you. If you'd like, you can send me an email at Andrew@BigTrends. I'm not sure if you can download it directly in here. I'm not sure if Katrina will be able to send that out to everybody or not, but never fret. You could just email me at Andrew@BigTrends if you'd like.
The presentation itself will be available, Andrew, but I don't think you'll be
great.
able to actually download the full PowerPoint yet.
I gotcha. Yeah. So, folks, I mean, if you're interested in it, feel free to email me, and I'll just send over the PDF so that you can answer these questions and so on and so forth. Garth says, what is the leverage on ETF? I guess, Garth, you're asking about what are leveraged ETFs, and just for anybody who doesn't know what leverage ETFs are. They're exchange-traded funds that seek a multiple in performance on a daily basis. For example, you've got there's been so many of them. I remember probably like you've got SKF that is the inverse leveraged of the Dow Jones Financial Index, Garth. So as the Dow Jones Financial Index, or roughly XLF, goes down 1%, it would go up 2%. But it's a leveraged inverse. You've also got leveraged non-inverse, and they've got leverage ETFs up to, I believe now, up to five times leverage. I know they were in development, but it seems like over the last 12 months, the most popular have become the 3 times direction leveraged ETFs. And they've got a whole slew of energy ETFs, just about anything you like. I would just say avoid trading those for any longer than some people would tell you a day. And sometimes that's just hard to do. But basically, they're dangerous to hold for more than a couple days. The longer you hold them, typically the further away from their stated performance that they get, because their stated performance is for a daily basis, not monthly or weekly or anything like that. So essentially, you just got to. And Herb says, who issues the 5 times? Herb, I think it was PowerShares. I saw a release. This has been about a year and a half ago. I'm not sure if they ever actually released them or not, but I remember when they were. It was one of those. I wrote an article about it. It was just a lot like the Gillette and Schick razor race, when they just kept on adding more and more razors to. It's like first 3 razors, then 4. Next thing you know, they had 5. But at any rate, if you Google search it, I'm sure that you'll see it somewhere. And I apologize, I don't have the answer to that, but I don't want to mislead you in any way. At any rate, back to the position review process. The position review process that you want to implement to become a better trader, I think a lot of people out there, even though they're trading on 5-minute charts, daily charts, whatever it may be, whether they're trading stocks, ETFs, ETF options, whatever it may be, that they're not looking at it on a regular basis. Number one, because you're afraid. I mean, the biggest thing about traders is I'd say 80% of you out there, I would say obviously 100% of you out there are sitting in front of a computer, obviously. But I would say that 80% of you probably trade one-on-one with no one around you on a regular basis. That really creates an environment where you can justify not following rules. And again, that's always, being the rebel rouser is fun, but in the end, we're not here to do anything other than make money. And if you want to get a good ROI, then you need to really have a systematic business-like approach to your trading, even though it may be a hobby. But in most cases, I know most of you out there have a defined objective financial goal for your trading. If you want to reach that or exceed it, then you really got to press hard on a lot of this stuff. But we do it every day. We just look where our, in fact, most of you can probably do this. We keep a tab of all of our trades throughout the company within one Excel spreadsheet that we all have access to that updates automatically to the ask price, which would be our worst case scenario for all of our buying, or to the bid price for all of our options that we've sold. So essentially, we get a real-time look at all of our real-time worst-case scenario if we had to get out at the bid or ask, depending on at the ask if we bought everything. So, worst-case price right now. At any rate, that may be a little bit too much, but every day you really should take a look at your overall gain and loss. And maybe not in your portfolio. We do with our portfolio. Maybe a little bit of the forest to the trees type thing, but for you, you do need to define what your routine is, and then make sure you do that. It may be weekly. I would typically say no more than once per day. If you've got a weekly system where you're just looking at stuff weekly and then putting out some options trades that are based on a weekly chart, take a look at it once a week. And it's very, very, very easy. There's several different things out there that you can do to log all your trades. Obviously, the majority of platforms and brokerages do have that. and are certainly exportable to Excel. Depending upon your level of experience with Excel, it's probably got the most customizations to it. But going back to the trade journal, very important here to make comments on each position. You could consolidate both the trade journal and the making comments on each position if you like on each one. I think the biggest benefit that you'll find by making comments on something like this is something that you noticed on that trade. Hey, yeah, this thing was just rock solid on CCI 60-minute, and you're just like, huh. And you go back through that and you say, yeah, a couple of these were really good on CCI, the Commodity Channel Index, 60-bar setting, and it now warrants maybe some pretty heavy and in-depth testing to see if that's something you should add to your system. Hey, Jay, Jay asked what my email was. It's andrew@bigtrends.com. And I'll probably get a number of emails, so don't fret if I don't get back to you within the hour or so, but I will make sure to get the PDF out to you folks. Yeah, but the making comments on each position can really prove profitable to noticing some emerging trends in what's effective in the market at the time. Because the market's always adapting, you could really find that your system's not effective, but to really notice what's working, making those comments, and let's be honest, it's just like talking to a shrink. You're going to really feel good about yourself by talking about, and everyone here is going to be one-on-one. I can't stress that enough. I mean, that's one common thread I see when I talk to a trader who's experienced losses or knows that they've not participated in enough gains, that they really feel good talking to someone about it. And that's all good and great. We're here if you'd like to pay us to listen to you, but you could really do this on your own by making those comments and then reviewing those to see what the where you could improve is. All right, so the trading plan, continuing on with this, one thing that I like about the preparation process is going back to what I do. We trade on a daily basis primarily. I've got an hourly, daily, and weekly technical system. The weekly is the only one I don't use options on, and basically, for the daily and hourly, every day, I basically look at stuff before the market and after the market. After the market, I take a look at all of our open positions and see if I should be taking profits. If something has, let's say, gone up to 70% gain, and somehow we haven't gotten an exit signal on it, but it's now down to 35% gain. Well, one of my rules is if I see a 35% retracement in profits after reaching a 40% gain, then I'm going to go ahead and get out of it because, hey, this is something, the last thing I want to do is give up gains. And that may be a time when my system may not be picking it up. And at any rate, if that happens, I look at that every day. And obviously, I don't make my trades. I don't place them before the next day. The next morning, I always take a look at and look for new signals. And obviously, then I've got all of my exits, profit taking, whatever it may be, ready to go from the previous night. And then I get out there and do it and place them all at about in that first half hour, typically around 9:45, 10 o'clock. There's nothing any better about that timing than maybe something you do if you do everything at 3:45. The bottom line is that consistency can give you an edge, both in your efficiency no one here has a ton of time on their hands, so you want to be efficient and you want to be consistent, and you'll reduce the overall output of energy that you put into trading, while in many cases increasing the return on your investment, which is obviously never a bad thing. But the bottom line here is that obviously it keeps it proactive rather than reactive. And I do apologize. I forgot that the coaching kit had the autoplay on the video that you were watching. If you go to that bigtrends.com/ISE, then you'll see the autoplay. You can press pause on it if you like. And I apologize. You're probably listening to both Price and I at the same time, which is not going to be confusing. But if you go on that, you can always press stop. You want to talk about what broker to use. This is interesting. I just saw a broker who I thought today was someone who was really not doing well, but they've just recently come out with a whole new bunch of tools and stuff that look pretty amazing. So even to me, this is something that I know if you've had a broker for years, this is still something that you want to take a look at. I mean, this was something that just personal insight that I was like, should I be switching over to this? It's a very competitive space, and there are a lot of improvements that continuously happen. So don't get comfortable and avoid yet another way to increase your return. Again, what's more important, the cost of the commissions or getting a good price? Certainly, again, it goes back to the level of your trading. Let's say how many contracts total you're trading, but worth going back and looking at. If you're not using some of the tools that your broker provides, and there's another broker that doesn't provide that tool but provides cheaper, then you obviously want to make that change. Commissions, I don't want to take away from commissions. They're certainly important, but you definitely need to have a good execution. And, that was probably a bigger deal 4 or 5 years ago, but you certainly want to, you can always Google search some stuff. That's obviously a good thing to do, but your execution prices, and I'm not going to name any names, but I can certainly tell you from being a newsletter provider where we do, we have a couple thousand people that are auto trading 8 different newsletters, and we see prices that come back from auto traders. I can tell you there are consistently better fills from certain brokers or consistently worse fills from other brokers. So that's something that you want to be concerned about, and that has an impact, again, on the whole reason that you're trading to begin with, right? To make that profit or to reach your financial goal.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.